The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is Mark Raymakers here with Insurance Agency Marketing Services. I want to thank you for taking time to join us here this morning on our Single Premium Life webinar day. Friday mornings at 10 a.m. are slated for Single Premium Life. So if that's what you're tuning into this morning, you've come to the right place. This is a recorded webinar. Good thing for you because I will email you this out through a YouTube channel to view, which is good because if there's anything that we buzz by here this morning, you have any questions on, or you can just view it as many times as you like on your own time. So the question box is open. If you have any questions, go ahead and type those in. The thing about Single Premium Life, I'll tell you real quick. One of the things we hear is that, underwriting is difficult and, it's too confusing, too complicated. So a lot of the advisors that we talk to do not offer this to their clientele. And that's the reason for this webinar this morning. There's some myths out there. We're going to address those one by one. One of the things about this particular product is kind of near and dear to me. When I was in the field, it was actually the first product that I sold. So I get it. I understand it. It has changed tremendously since that fateful summer evening in, I believe it was 1989 when I wrote my first case on Single Premium Life. So I understand some of the concerns that a lot of you may have. We'll address those. If you have questions, you can certainly, as I mentioned, type those in the box. I do recognize a lot of names on here this morning. We've got a great attendance. And I noticed that some of you really haven't had a chance to talk to about Single Premium Life. So I personally will be calling you. I would appreciate a few minutes of your time just to answer any questions you have, talk about cases you run into, talk about some of the challenges that you have. I've been in the field myself, so I understand it's a unique challenge out there, especially when you come to your prospects and clients with it. And one thing I will say before I go on here is I do a lot of reviewing of statistics as it pertains to long-term care, and a lot of Single Premium Life is written or sold based on that. And statistically, long-term care, individual standalone sales continue to drop year after year. Companies are getting out year after year. And we know a lot of those reasons are because of health issues, because of the cost, because of rate increases. So Single Premium Life will address a lot of those issues and put your clients' minds at ease. The hybrid life plans, which Single Premium Life is, those sales continue to go up and up and up. So, all right, let's dive into some things that we do for you here. Some of you, I notice, are licensed with us, so you know some of these benefits and you have taken advantage of them. So real quick, what we're going to talk about is some things that we do as an IMO going 33 years in the business. And one of those things is a big deal to us is the referred producer program. We get a lot of our new advisors from you. And so when you send somebody to us, what we do is we pay you a $50, basically a finder fee. When they send a contract in, it's $50 to you every time they write a piece of business. You're going to get paid for it. Now, we pay you once a quarter. So as an example, if you were to send us 3 advisors that write a combination of Single Premium Life and annuities at $1 million each, that's $6,000 in your pocket. Now, we don't reduce your commission. We don't reduce the agent's commission either. It's the same competitive street level. It's just our way of saying thank you. And so if you think of somebody you think might be a good referral over to us here, we're going to get you some cash for that. And it's going to be sent to you every quarter as long as they're producing. So we have some advisors out there collecting over $10,000 a year, every year, and it's been going on for several years. So keep that in mind. Now, this is something that I really like, is the marketing reimbursement. I know when I was in the field, I received my commissions, that was it. But what we do is we pay you commissions plus a marketing reimbursement. So as you write business with us, as an example, you write a $100,000 Single Premium Life case, we're going to put $100 in a marketing reimbursement account, and that will sit there until you're ready to use it. Now, a lot of our advisors will use it to buy leads, pay for their seminars. Summer is a great time for customer appreciation picnics. Let's say you spend $1,000 on a customer appreciation event here in August. We will send you a check for 50% of your expense. So in other words, we'll send you a check for $500 to cover 50% of that expense. So keep that in mind. That's something that a lot of our advisors are not taking advantage of. And if you get on board with us, you can certainly take advantage of that as well. And I will apologize, I've got a summer cold here, so We're going to limp through this thing. All right, so we've got a new producer bonus. I see a lot of new names on here this morning. Welcome aboard here. If you get contracted with us, you write $100,000 in single premium life, or $100,000 annuities, or $10,000 in target life, you have a choice right off the bat. In addition to your commission, there's a new producer bonus. You have $750 in cash or a 2-year subscription to the website service. Now, you can buy that or earn it, or you can get a new iPad. And I'm going to stop real quick and tell you, you write $100,000 in single premium life with us, not only do you get that commission, this $750 cash bonus, but we also have one of our carriers that would pay you $1,000 in bonus, so $1,750 for your first $100,000 case. We can talk about that more later, but it's a great opportunity for you to really hit the ground running with some nice commission to take you into the third quarter. And the next level is the $300,000. So if you want to wait, you can certainly do that. You can receive the Social Security program and 3,000-piece mailing. A lot of our advisors take advantage of that. It's a great way to get in front of more senior buyers. Not only are you selling more single premium life, we do see a lot of traditional life and a lot of annuities written. So it's a great program you can earn, or of course you can buy into that. And you can certainly call our number. We can get you information on that. Or you can take advantage of $2,000 in marketing reimbursement or a $1,500 gift card. Lastly, you might wait to get to the $500,000 level. So you could choose. If you like to do seminars, maybe haven't been successful with it, know you're a great public speaker, but really don't know how to get going into it, we've got 2 opportunities for you here. You can either take advantage of Matt Gill's 5,000-piece mailing and seminar coaching, or Dave Pimper's 4,000-piece mailing and seminar coaching. Both of these advisors are top producers with us. They do a tremendous amount of business. They are really good at that. Or if you opt to not do that, then you could take advantage of the Ritz-Carlton travel package and set up a nice vacation for yourself and your family. Our back office support really is tremendous. I've been in this business now 30 plus years, and I can tell you that the service that we provide is top shelf. From submission to commission, we do your illustrations for you. We provide you the case management. So when you write an application, we scrub the apps. On your traditional side, we order your exams. On the single premium life side, there is no exam, and you'll hear about that more in a minute. But we truly watch your cases for you as they go through the process. You don't have to worry about doing that. So it's a nice deal. It's super easy. The paperless contracting as well. You go to our website. We can either email to the contracting to you, or you can go on the website. It's efficient form. You fill out the contract once. You can select as many carriers you want. It's all easy. Lots of easy buttons here with IAMS. The creative marketing solutions, I'm going to just touch base on this real quick here. One of the things that I've seen in the 9 years that I've been here is us evolve into having a phenomenal creative department here. We are branding agents. We are helping them with logos. You can see in the middle one here. A lot of advisors out there don't have a logo, don't have any kind of brand. So what we do is we help you to put that on every single thing that you have that's communicating to your clients as you prospect, as you do any kind of advertising. We know there's advisors out there that are doing billboards. Anything that you want to do to get yourself out there, even social media. If you want to put on Facebook, we help a lot of advisors do that. Anything that you can think of as far as brochures, we have a library of things right now that we can customize for you, or we can develop stuff for you. So whatever your creative mind has, or maybe you've got an idea you want to run past them, they can help you with that. So take advantage of our creative marketing team here. Now our website, I hadn't mentioned it yet, it's www.imzinc.com. Again, everything that you need to do business is there. So you can call our office at 7:30 in the morning, Central Time. Someone's going to answer the phone within 3 rings till 5:30. Now, of course, there's times you're going to run an appointment after. You may have a Saturday appointment or maybe even a Sunday appointment. And you might need an illustration. You might need product information, contracting, an application. It's all there for you. It's designed to keep you producing when we're not available to help. So keep that in mind. Another thing real quick is our retirement analyzer. I just want to say real quick that there's a lot of you out there that I've talked to that really don't know exactly what's a good tool to use to make sure that I'm providing the best advisory services to my clients. The retirement analyzer is just that. It's pretty complicated. I shouldn't say it's complicated. It's very concise. It's going to go through a lot of different things to help make sure that your clients can retire when they want to retire at the income level that they want to retire. So if you have trouble with the computer, you're not real report savvy, this might be a little more challenging to you. But if you are, you're comfortable and confident in that, I would certainly call. Ask for Marcus in our office. Again, Marcus can help you with the retirement analyzer. It's a great tool to help make sure that you're doing a great job for your clients. Okay, I've got a couple of polls, and then we're going to dive into the heart of this webinar here this morning. First off, we're going to talk about our IAMS wealth just real quick. I promise you I'll make this quick and easy. So here's the deal. With the Department of Labor, we were ahead of the game. We opened our own RIA. So we help manage money. We can help you to manage money. We can help you to get your series exams completed. So not only will we help provide the materials you need, but also the financial support to do that. A lot of you might be with a broker-dealer right now. You're not real happy with the fee structure, maybe the commissions, the handcuffs, the lack of control you have in your business. You can actually run everything through here. Fee structures are very competitive. Commissions are top. You know, I had my series exam, or my license, I should say. I get this. I understand it. One thing I do know is that in providing this benefit to your clients by getting licensed to do this, you're able to get clients that you had never gotten before. I've seen our advisors that have gotten it have picked up millions of dollars in business because of the fact that they have this. Now, maybe you don't want to go and go take the test. I understand that. It's kind of hard to teach an old dog new tricks sometimes, right? Maybe you want to make sure that that client that you have can have somebody manage their money for them and get paid. Guess what? You can do that. So the poll here is this simple. If you want to speak with someone in the IAMS Wealth Department, or company, I should say, if you mark yes, what we'll do is we'll have somebody call you. They can answer any questions you have, benefits and services that are provided. The bottom line is this is another part of your business that you can help service and satisfy your clients and get paid for it. So if you want to, yeah, there we go. Okay, see, some of you are marking yes. By doing that, I'll have Mike Hansen call you. Or one of the other fine folks in that area. You might just decide that you want to call yourself. You can certainly do that. Just ask for IAMS Wealth, and we'll get you over there. Okay, great response there. Appreciate that. It's a big part of the business. I mean, that's a whole other aspect of what we do, is making sure that maybe you're taking advantage of the ups and the downs of the market. And you know what? Just writing annuities or just writing life insurance isn't the solution. It certainly is a great part of that three-legged stool, so to speak. And the IAMS Wealth team can make sure that we are covering all aspects of the business as far as servicing your clients. Okay, I'm going to close the poll. Let's get going here. Time is money, right? Okay, so one last poll here. It's our Life and Annuity Training Academy. We do a lot of training, and you'll notice if you look at our webinar schedule, we've got something going on every day of the week because we want to make sure that you're well informed, well educated, and obviously making sure that you're in the know with what's going on in the industry. So that's what our Life and Annuity Training Academy does. By marking yes, all you're doing is saying, I'm interested. I want to know more. I want an invitation. I want an agenda. So our next event is scheduled for probably somewhere September, October timeframe. We're still trying to nail down the date. Probably going to be in Des Moines. Our office is in Omaha, but we have companies that like to co-sponsor it with us, and we have it in their fine facilities. So what we do is we bring speakers in from across the country to show you some new concepts, some new things that are working out there. We're going to bring up to speed with, there's some product, obviously there is, because in the concepts you need a great product for it, right? So it's all encompassed. We pay for your airfare, we pay for your meals, we pay for your lodging. So there is no expense to you to attend this event. We fly you in on a Wednesday, so we'll do a few short presentations Wednesday evening. Of course, we'll feed you that evening as well. We'll have a nice little social hour after, or however many hours it takes. It's a good chance for you to get to know some of the other advisors, and there's a lot of great idea sharing in that. So then we do a full day of training on Thursday, a half day training on Friday. We get you on a plane, we fly you back home. Okay, so you kind of get an idea. It's about three days out of the office, but I will tell you, again, I've been here for 9 years. Agents that attend this event do see an increase in their production. There's a lot of ideas. So you can't use them all, but it's a great opportunity for you to look at how is this going to fit into my business, and then let IAMS help you to implement or integrate whatever that is into what you're doing. So anyhow, pretty decent response there. If you're not getting free training, if you haven't been out to one of these events, I'd certainly encourage you to do that. It's a great way for you to grow your business. There's no doubt about it, in the life and the annuity side of your business. So keep that in mind. It's not one-sided. Okay, if you decide that you want to attend the event or you want to know more, you can certainly call our office and we get you some information out on that. Okay, real quick here, we do trips. A lot of agents ask about trips. We've got our IAMS 2019 Marketing Summit in Naples, Florida in August of 2019. That is for producer and guests. Great trip. You can see down here at the bottom that everything that you write with us will earn you points. And we do it on a dollar for dollar. So like $3 million in annuity premium. And then it's kind of broken down throughout. So if you focus on just one product line, that's what you need to do. But keep in mind, everything that you do from January 1st of this year all the way to June 30th of 2019, all those dollars count. Okay. So here's what I want to talk about. Defanging the SPL myth. Again, I talked to a lot of advisors about this, and I hear a lot of things about what's keeping them from doing single premium life. I think the last article I read says that one of the reasons why seniors don't buy long-term care is because advisors don't talk about it. So here's what I hear. It's too complicated. My goodness, I started in life insurance 20, 30, 40 years ago, had to order APSs. You know what? It's just too much. I don't want to do it. Okay, so we'll talk about that. Qualified and non-qualified. We're going to talk about what you can do with your clients' qualified, non-qualified assets. There's a lot of advisors that are surprised you can do anything with qualified dollars for single premium life. We're going to discuss that. I hear this a lot. Oh, annuities are so easy. You know what? There's a lot of truth to that. They are pretty darn easy. You write an application. You don't have to worry about an underwriting declining somebody because maybe they have a health issue that they're not interested in. But there's also the compliance and suitability issues you have to address within annuities that you don't have to address with single premium life. So that does have an impact. Underwriting is too tough. You would be surprised. I remember when I got started in this business that if a person had a heart attack, they were probably not going to get life insurance. They'd have to wait a long time. You know what? A person can have a heart attack, and 2 years later, we're getting them insurance. Or they have had cancer in the last couple of years. We're insuring them. Diabetics are getting insured. It's not too tough. It's very simple. Table 4 is a standard issue. Some go up to Table 8. We actually approve a case on the spot, so you don't have to wait for this long, drawn-out underwriting process. Processing time is too long. We're actually getting single premium life policies issued as quick, if not quicker, than annuities. And why should you sell SPL? So those are the things we're going to talk about today. Of course, who's a prospect? So let's break them down. It's too complicated. It's life insurance, right? You know what? It is life insurance, but it's a lot different when you look at single premium life. All of the products that we represent are going to provide for a guaranteed death benefit. We have added a new one to the portfolio here recently. It's not guaranteed, so to speak, but if you look at what we're earning in interest today, even the midpoint, it'll carry it out to the mortality. So what is the life expectancy of clients today? We have a whole life product, we have index life, and we have universal life. The index life, this is where it gets interesting because you're going to get the growth in that contract that your clients are used to seeing in an annuity. So it's not like you're just going to get a fixed amount of coverage and it never changes in value. You'll see that on the whole life insurance contract. What you see is what you get, okay? But one of the things that we're probably all used to is in the universal life or the index life that, it's volatile to interest rates. The cash growth is, but the death benefit is going to be guaranteed and fixed. So take that out of your thought process that it's not one of those UL policies that you and I sold 30 years ago where it was crediting 9, 10, maybe 11 or a higher rate of interest. These products have a minimum rate that's guaranteed, and then they have an alternative rate. But the death benefits are guaranteed. So your clients don't have to worry about losing out on that value, so to speak. And here's the other thing. We truly are product experts. And so would you call us with a prospect or, we're doing maybe a weekly or monthly follow-up just to touch base, see how things are going, share some new ideas with you. The thing is that if you've got a prospect that you're working with, we're going to ask you some questions. We're going to find out what's their objective. What's the money, they're sitting on dollars that they're going to put in a single premium life. What is it they're trying to accomplish? It might be that they're looking at maybe getting a lot of long-term care, or maybe it's a wealth transfer. We're going to find the product that's best suited for your particular prospect or client. Okay, so qualified versus non-qualified. Here's what we're doing. A lot of clients out there, as you know, they're probably getting RMDs and they're just sticking them in the bank and they're not really doing anything with it. But we can leverage those dollars by rolling them into a combo product. And we've got a few different ones out there. What I mean is these combo products are realistically a single premium immediate annuity with a life insurance, and they are tied together for life, okay? You can't buy these particular products separately. They're a combo deal. Now, before I go on, I will tell you that we used to, in the day, go back and we'd write a SPL on with one company, and then we'd write the life insurance over here with another company. We still do that. But the deal is that when that happens, your client receives a check, and then they've got to go over and they got to write a check over here, and then they get the 1099, and there's taxes and all that, okay? So we have carriers, we have products today that it's simple. You write one application, your client is done, okay? What happens is the SPIA, or the money coming from the qualified account, goes directly into the SPIA, and then the SPIA distribution funds the life insurance policy. Your clients never receive a check, they never write a check. They just get a 1099 for the distribution that's taxable each year. If it's a non-qualified, we'll get that here in just a second. So in terms of qualified, the whole distribution is taxable, right? And that's attractive for a number of reasons, because when they pass away, that qualified account is no longer a taxable time bomb for the beneficiaries. They get the tax-free life insurance in the end. Now, if your client dies during the distribution phase of that, the beneficiary would receive, now again, this is going to depend on the company we're doing this with, the beneficiary would receive the SPIA taxable, whatever's left in there, and then they would receive the life insurance tax-free. So it's very attractive that way. And if you stop and think about this too, your clients are probably in a lower tax bracket than the beneficiaries are, because usually when your clients pass away, that's when their children beneficiaries have probably reached their peak earning years. So imagine them inheriting that $100,000 qualified account on top of their current earned income. It can be a pretty big deal, and I've seen that happen where it's somewhat devastating to the person who's in a pretty high tax bracket. So the non-qualified assets, we can do the same thing. There's a number of different ways we look at single premium life, and sometimes it makes a lot of sense to surrender that existing annuity and pay the taxes and then put in a single premium life. We get enough leverage to where even after that, it's substantially higher benefit, which can be used for long-term care, which then goes on to beneficiary tax-free, right? So there are times, though, when you've got an annuity you wrote a long time ago and the growth on that is tremendous. So your clients still want to put it in a single premium life, but they don't want to surrender and pay a large tax amount. So we can still use the same SPIA life combo, okay? All right, so true single premium for max death benefit and accelerated benefits. This is the whole idea behind single premium life, is your clients have dollars they're not living on, maybe they've inherited them, and they want to make sure that they have some long-term care benefits. Because if you were to realistically sit down and ask your client, I've got a bag of money right here, I have a $100,000 annuity that you're living on right now, there's going to be a taxable, there's a tax tag to that. So let's say in the end it's $90,000 that you can have for long-term care, or let's surrender this. Let me back up. So let's say we've got that. I don't want to confuse this issue. The first bag is $90,000 after tax from an annuity if they have a long-term care expense. Or we go over here and bag number 2 is $150,000 of tax-free dollars you can use for long-term care. What would you rather have? The first bag or the second bag? Well, of course, they're going to take the second bag, right? So what happens is they're going to have to surrender the annuity, pay the $10,000 in taxes to fund the single premium life, okay? So that's where we get the difference of the two. What would they rather have? I hope I didn't confuse that issue. But this is really the explanation that you need to have with the client is, how are we going to do this to make the single premium life attractive, okay? It's really about the long-term care. If they're not using the money, let's surrender that annuity. Let's pay the taxes, let's put it into a single premium life and get a great bump in value for long-term care. Of course, if they don't use it, it goes tax-free to beneficiaries. So let's take a quick look at it. This might be off just a hair, but if you look at the single premium life versus the annuity, the commissions, up to 15% commission on a single premium life. There might be a few annuities out there that are up to 10% right now, but I think that's getting pretty slim. See, there's a substantially higher amount of commission. Turnaround time, about a week for single premium life and annuities. Return of premium feature, both the same. You know, you can find a return of premium in both. Premium bonuses, the premium bonuses actually were at 10% right now, and the annuity might be a little bit better, but you know, right now there's not a lot of companies that are above a 10% maybe on either end. You might find a few that are at 12, but right now the best we have on single premium is a 10% bonus. So that's kind of nice for your clients that are used to getting that. Not only that, but maybe if you're going to surrender annuity and there's a small surrender charge on it, by putting into one of these products that has a premium bonus, you can offset that surrender charge. Guaranteed interest rate, 3% would be about the max. Typical right now is 2%. Guaranteed on single premium life, annuities 1. Physical exam, no, there's not on either. Free withdrawals, we can take 10% out of either. Loans, you can take a loan against a single premium life, can't do it against an annuity. Accelerated benefits, they both have it, but you're going to see that it's going to be tax-free on single premium life. Chargebacks are the same. Issue ages, we can issue up to age 95 on single premium life right now. Annuities, the highest might be the 90 out there. Tax deferred, yes for both. Tax-free transfer death, yes for single premium life, no for annuity. So here's the point of this slide. If you're selling annuities and you think that single premium life is so much different, I think you can see in this slide right here, they're not that different. You're used to going out there and collecting large checks from your clients. That's what single premium life is, collecting a large check, okay? If you walk away from this at all today, this is one thing I want you to gain from this, is that single premium life is very much the same as writing annuity. There's a lot of similarities. Okay, so underwriting is too tough. Well, let's look at it this way. It's different than it was. If you stop and think, I don't know how many of you have been in this business for 20 plus years, but you remember, there's a comment I made early on, that when you went through underwriting, there was probably a lot of declines. There's a lot of attending physician statements ordered. You know, you just feel like I'm spending all this time in underwriting. When I write an annuity, it's quick, it's easy. I know I'm going to get paid, right? So this is the difference. With us here at IAMS, you can come to us with a case. And instead of you thinking right away that your client is not going to get approved, when we have a chance to visit with you on the phone, we're going to ask the health questions that we need to know to determine whether or not they're going to qualify for it. So we are going to provide the field underwriting support. We don't expect you to know which companies to go to. We don't expect that you're going to fully understand that your client that you think is going to get declined is going to get approved. That happens a lot. So keep that in mind. Let us do the field underwriting. Let us help you with that. We're going to shop the carriers. We know who's going to be best with your client's health, or what are their objectives? Do they want to have long-term care as a primary focus, and maybe life death benefit as a secondary, or vice versa? We know where to go with that. As I mentioned, Table 4 is a standard issue. So most companies in the business that offer single premium life use a Table 4 as a standard issue. So what does that mean for some of you that don't know? Each table is a 25% markup on the standard mortality rates. So you might have a client that realistically, if they went through full underwriting, they might be a Table 2, okay? But that's full underwriting. With the single premium life, there is no exam, okay? We do a paper app, we do a phone interview, that's it, you're done. Now, we will still order attending physician statements or APSs depending on how your clients answer the health questions. Now, a lot of these, when they're doing a point of sale, if they mark yes to certain questions, it's an automatic decline. That's not the case for all of them. Some of the companies will go up to a Table 8 substandard, so that would be tables 5 through 8, which is nice. So those clients that maybe had a heart attack 2 years ago doesn't mean they're going to get declined, or had a cancer 2 years ago doesn't mean they're going to get declined. So when in doubt, call us. We'll let you know whether or not they're going to get approved. Here's an example of some standard issues. Heart attack 3 years ago, cancer in remission after 4 years, diabetics. There's a lot of fear out there that diabetics are not going to get approved. It comes down to what is their A1C, how is their control. We've had clients or applicants that had a pacemaker after 2 years that were approved. So again, before you walk away, give us a call, give us an opportunity. Here's some substandards, as I mentioned already. Heart attack 2 years ago, cancers in remission after 2 years, stroke after 2 years. So those will be the clients that are going to fall under the Table 8 substandard. Again, don't walk away, give us a call. Okay, processing time. Here's another one of the things. It takes too long. I don't have time to wait for this. Well, I get that. But if you complete a paper app and a phone interview, as I mentioned, what will happen is, I've even written these myself. It's pretty easy. You do the application, you call a toll-free number, which is on the application. You get a phone underwriter on the phone with you. They're going to go through the questions with the applicant. we do that for a couple different reasons. Companies do it because a lot of times what will happen is they will tell the person on the phone something they won't tell you. Or maybe they'll think of something, and what happens is the underwriter gets a chance to dive down a little bit. And what they'll do is when they're all done, your applicant hands the phone back to you, and they're going to say, Mr. or Mrs. Agent, your client is approved or declined. So what happens sometimes when you have that client that inherits dollars, it doesn't look like they need it. If they get declined, well, then you can always fall. Can you hear me now? I hope so. I must have accidentally hit the button. Okay. All right, I'm back. Hopefully you can hear me. Sorry. Okay. All right, so I had to periodically mute you so I wasn't coughing in your ears. Okay, so let's look at the other thing here. It can help you through a slump. Here's one thing that I've seen in the business, and I know that I've spoken with some of you too. You run into a time where maybe things are a little bit slow. Right now we're in that time because a lot of folks are taking vacations, not only your clients, but you are as well. So we experience the slumps. I don't know if we want to call them slumps, but they're just they're a little bit down periods where a lot of people are out. They're just not working right now. They're enjoying time with their family. So what this does allow you to do, in my opinion, is you got to work through them. So what do? You see more people. You make more calls. And one of the things that you can do is you can go through your files and you can maybe go through some of those clients that you know that might be good candidates. And this is an opportunity for you to give yourself a little bump in commissions by going out and writing some single premium life with your client or for your clients. Okay. Helps you find annuity sales. Here's the other thing that I've found. Some of our most successful advisors, one of the things that I hear on a continuous basis is that by doing a review, I don't know how many of you are doing that, but we do have some really good, I keep seeing that they're, okay, hopefully everybody's audio is okay. I'm periodically hearing that the audio is stopped, so hope you're all okay with that. I'm not really sure what's going on. Looks like everything is good on my end, so, okay. So, in the review process, which is something I learned to do a long time ago, And the successful advisors that continually go out to do reviews with their clients find dollars that they didn't know were there. And so we have fact finders we can make available to you to go out, do some reviews with your clients, find out where some dollars are sitting, find out what their concerns are. And I'll tell you, a lot of them are going to be concerned about potentially not having some sort of long-term care in the future. They don't want to pay for a lot of money for it, but they might have money sitting somewhere that they can move into it. So in the process of going out and doing reviews, using the fact finders that we have, we're also realizing that a lot of our advisors are finding opportunities to sell annuities that they may have missed before. So this is a great opportunity for you as well to go out and write additional annuity business. I believe it also helps solidify the existing client relationships that you have. You're going out, you're doing those reviews, you're showing them that you're concerned about an aspect of their life that they probably really don't want to face or they're concerned about, but there's still that little fear in the back of their mind that what happens if I have a stroke? What happens if I have an aneurysm and I've got to spend the rest of my life in a long-term care facility? Or what if I need someone to come and take care of me and my wife can't do it? Or maybe you've got a lady, her husband passed away, and she wants to stay at home, but doesn't have any kids around that can come and take care of her. So she could still stay at home, but she needs someone to come in and help her bathe, maybe help her cook, do some of these things. And again, it's 2 of 6 ADLs, so that question comes up a lot. The inability to perform 2 of 6 ADLs are the triggers for these, and it's pretty simple. So it's just another part of what you can do to help your clients to give them that peace of mind. Up to 15% commission. So stop and think about this. I mean, we're in the business to help people, right? But we also get paid to do it. So I tell you that the commissions are great because that's one of the things I think that it can be a motivating factor to say, you know what, I just need to kind of buck up. I need to sit down and I need to become more familiar with this particular product and introduce it to my clients. And I'm going to get paid for it. I mean, obviously we do this because we want to make money, but we really want to help our clients as well. So this is a way for you to make money on annuities that are not paying you future commissions. You might have annuities, you wrote 15, 20, 30 years ago, and your clients aren't touching those dollars, but they could be a good candidate for single premium life. So the only way we're really going to know is maybe if we spend some time talking one-on-one, and you may not have a lot of clients out there, you might have a few, but you know what? It's a few. It's still going to help them. It's going to help you. And this is kind of funny. I like to tell this story real quick before I move on to the next slide. But there's an advisor out there that's been doing business with us now for, I believe, probably 7, 8 years. He's a really good friend of mine, and he called in here because he wanted to talk about annuities. And I said, hey, let me ask you a quick question before I get you with the annuity guys. I said, hey, do you do anything in the life insurance market? He said, I did that, 30 years ago. I'm done with that. I'm tired of it. And all of the myths that we talked about here today were his objectives. It was kind of funny. And I said, well, let me ask you something. If I can show you a way to help your clients that aren't living on assets that they set aside, to help them fund their long-term care and to help them more favorably pass these assets on to their beneficiaries one day, do you have 2 minutes to talk about that? Sure I do. Sure do. So we went through all the things we talked about this morning. In 1 year, just 1 year, he wrote $1.3 million in single premium life by going back to his existing clients at the rate of 15% commission. That was the biggest, best year he had had in his career. And that was in addition to all the annuity business he was running. So it didn't take away from what he was doing. It complemented what he was doing. And he wrote a ton of business in 1 year. And you know what? He's still one of our top single premium life producers. And that's 7 years later, he's still doing it because now he knows what he's looking for. And I can help you with that. I'm pretty passionate about it. You can tell. I love the product. It's a great thing to offer your senior clients. Okay, so who's a prospect? Real quick. Again, it's any client that maybe you've written an annuity on in the past that they are not touching. Maybe they're 65 years old, they're retiring, and you know from your review with them that they do not need this asset. They're going to just probably pass it on to their kids. I can tell you, I've seen a lot of these suitability forms that ask, what do you plan to do with this money? I plan to do nothing with it but pass it on to my kids. So the agent in the path of least resistance is saying, I'm going to take a 7% commission on this annuity. I'm going to stick it here because I don't like life insurance. All the myths we talked about, okay? That's what you're looking for. Those clients that maybe They haven't taken a free withdrawal. They got $500,000 in annuities. They haven't touched anything. Take a 10% free withdrawal out. Lessen that tax burden in the future. Put it in single premium life. Get them a nice death benefit. Get them some long-term care benefits that they don't have today. RMDs. A lot of times, like I mentioned earlier on, they take it, they stick it in the bank, it sits there, and it just gets dusty, moldy, rotten, and the bankers are just getting high on the hog, right? They're doing great, but they're not getting really any growth on that money. Take those dollars out of that account, or let's capture it right now. Let's move that qualified fund into a single premium life product. Look at the Medicare supplement clients. I have advisors out there right now that are selling Medicare supplements so they can get into the house, meet the seniors, and look at their assets. One of the things when you stop and think about it, when seniors retire, they know they're going to have a limited income, and they know that expenses are going to go up. Nothing is going down anymore, right? So what they want to do is they want to consolidate. They want to reduce their expenses, get them under control. And one of the things I see is that they want to stop paying premiums on life insurance policies. I get calls every day from advisors that are saying, I got a client who's paying premiums, I got this much cash value, blah, blah, blah. They want to be done with it. Okay, so we roll it into a single premium life. We get some great leverage on those cash dollars that are sitting in that policy. They no longer pay premiums. They get a guaranteed death benefit, and they get long-term care benefits as well. We also can protect assets from Medicaid spend down with some of the single premium trust products that we use. So keep that in mind. Bottom line is, I say anybody who's in this business is going to run into a prospect or has a client. This is something else. Life insurance clients with imploding UL policies. Let me tell you something. When I got in this business, I was averaging 200 UL policies a year. I wrote a ton of them. And you know what? By year 3, interest rates had dropped tremendously. And I'm scratching my head thinking, oh my gosh, these clients' policies are going to be in trouble. So I had to go back and I had to ask for higher premiums. Here's what's happening. Only 51% of the advisors in this business actually go back to do a review with their existing policyholders. So there's a very, very good chance that if you have not talked to your prospects or your clients about their life insurance policies, chances are they're probably sitting with a policy that's in trouble. So ask those clients that you have or the prospects that you talk to, when was the last time you reviewed your policy? Or do you have the old insurance or the new insurance? What do you mean? Well, let's look at your policy. Chances are they have something that's in trouble. We do a lot of rescues. We roll those into single premium paid up policies and they're done with it. So keep that in mind. Here's the other thing. There's a lot of policies out there today. I kind of call them the old wedding policies because I used to see them all the time. That first single premium life policy I wrote was one of those old wedding policies. She was like 70 years old, had a bunch of cash value. She had a $10,000 policy. I'm kind of going off, I'm guessing here. It's been a long time. It's been 30 years. But what happened was she had like a $10,000 policy with $8,000 in cash value in it. Who's at risk? It's not the insurance company anymore. It's a client, right? Because the company is only going to pay the death benefit. That's only $2,000 more than what's in the policy. So if your clients or your prospects say, I have a paid up policy, say, that's great. I want to show you something. There's gold sitting in that policy, and let me show you how this works. We take that cash value in that policy, now assuming that they're insurable, and we don't want to replace a policy just to replace it, right? We want to look to better their situation. So if they've got $8,000 in a cash value policy, we could probably get them $6,000 more in death benefit than what they have today. So that's a big boost for their death benefit, and it's a boost for your pocket, right? So don't forget to ask about those policies. There are a ton of them out there. Plus, not only that, but the mortality rates are lower per thousand now than they were, and the interest rates are higher. So one of the things I learned to do is to look at the policy, and when I would talk to them, and some of you may or may not do this, is I could tell them the mortality tables. One of the policies I replaced was a mortality table based on the life expectancy of people during the Civil War. So the cost per thousand is substantially higher than it is today, right? So that's one of the things you can look at the CSO standard ordinary mortality tables and point out to them, this is one of the higher cost per thousands compared to what it is today. So that's how we can get you more insurance with the cash value that's in your policy. Okay, let's go on to long-term care clients. This is something I'm finding, as I mentioned before, long-term care sales are going down. Companies are getting out of the business. There are a lot of advisors that we do business with that sell long-term care, and you're going to get declines, right? The single premium life really focuses on mortality rates, not morbidity. So if your client can qualify for life insurance, they're still going to get the long-term care benefits. Now, some of the plans we have are going to underwrite for mortality and morbidity. So they get declined for the morbidity side, they get declined altogether, right? So stop and think. Maybe some of you have written these policies. I'm not picking on, like a Money Guard or One America, but if they get declined because of the morbidity side, we have products that we've been able to get them approved because all we're looking to do is make sure that they qualify from the mortality side. So stop and think about that. And remember, those clients that have been introduced to long-term care, they don't want to pay for that expensive standalone plan. A lot of them, it's not in the budget. Okay, let's take a minute here. Let me answer some of these questions because they're starting to build up. So Greg's at, well, you know what, Greg, I guess your question is after they get declined. So when it comes down to it, if they've been declined for one of these plans, they focus on morbidity, we can look at these plans from the mortality side. Okay, so we can do something, not always, depends on what it is. We've had people be declined because they had arthritis on one of these hybrid plans that underwrites for both. But we were able to get them insured under these just mortality side ones. So let's see. Question. Client has $11 million secondary with $1.25 million cash value. Both insureds need long-term care and life insurance. Okay. Yep. We can talk. That sounds good. That's something we can certainly address. I'm going to go ahead and I'm going to close out that question. Go to the next one here. Appreciate you all holding tight, but obviously these questions can help you all. Widow is 80, 306,000 non-qualified. 200,000 basis, not new for income. Options. This is perfect timing on this one here. So the question is, we got someone who's 80 years old. John wants to know, can we do something? Yes, we can. We've got one carrier that'll issue up to age 85 on one of those hybrid, the combos, the SPL, the life combo deal. Otherwise, it's going to be age 80. So we do have something for you on that one. So I will call you when we're done here, John, and we'll go ahead and we'll discuss that prospect. Okay. You know what? That's it. That was the last slide. So here's one thing, as I mentioned to you, I noticed that some of you had hopped on. This was recorded, so some of you missed out on some of the things we addressed initially early on, but that's okay because I will email this over to you. And let me tell you one thing real quick. If you're interested in one of our webinars, especially a single premium life or one of the life ones, what we do, a practice here is if you register for the webinar and you cannot attend it, or maybe you register and a client comes in, or you've been waiting for that phone call for a week and now they're finally calling and you need to go ahead and leave us, that's okay to do that because we're going to send you out the recording anyhow. The other practice that I have, my staff, is that we're going to call you after webinar. And our objective here is to help you. I know there's a lot of IMOs out there that are vying for your business. We are the top 3 carrier or IMOs for a lot of the single premium life companies that we do business with. We do a tremendous amount of it. In fact, we do more in 1 month now than we did 9 years ago when I started in a whole year. So we do a lot of this business. We understand it. We've created a lot of tools. We've created what we refer to as the Single Premium Life University. If you get emails on that, I encourage you just to go ahead and register for it. You'll get a video that I've recorded if you can put up with me for every week, and along with these single premium webinars. But we've recorded some just 3 to 5 minute little snippets to give you ideas, to help you to understand it. And so the other thing is, when we call you, it's because we want to just kind of, I guess, bottom line, see what we can do to help you. This is a huge part of the business today. There have been so many companies that have entered into this single premium life business in the last 5 years. It is absolutely amazing. And, we've got a very robust portfolio. So, we can help you anywhere from newborns all the way up to age 95. And we continue to find if there's a carrier out there that you are attracted, you really want to do business with them and you think that it's something or someone that we should look at, call me. My name is Mark Raymakers. I'm going to do what I can to help you to get into this business and to complement what you're doing. I'm not asking you to change what you're doing. I'm just saying, hey, let's talk about how we can complement your business by bringing this into the fold. Because if you look at it, this is what seniors are buying. They're interested in it. I have agents that, and I hadn't mentioned this before, but agents that are selling long-term care that are now saying, hey, long-term care is getting expensive, long-term care is getting rate increases, companies are getting out of the business. This is what I do. Help me to provide them an alternative. Well, here's the alternative. It's either single premium life with long-term care, or it's one of our traditional life companies with long-term care riders. We've got some dandies out there. So if you're looking for something other than single premium life, we have them. And remember, the thing is, if your clients don't use the benefit, they don't lose it. Okay, that policy is going to get passed on tax-free to a beneficiary, whomever they name. Okay, so this is a great deal. I'm excited about it. I love it. Okay, let's see. Greg, 68-year-old, does nightly dialysis at home. Any possibilities for life insurance? That's a tough one, Greg. That dialysis is a tough one. Not a very good opportunity for you there. But unless you wanted to move money into, here's something I really didn't hit on very heavily, but we can move money into some different trust products we have to protect money from Medicaid spend down, up to $100,000. So if you've got a client that's got some dollars, they're not too keen on spending their assets down to nothing. They want to protect some, make sure that they can have a dignified funeral, or maybe pass some assets on to their beneficiaries someday. We have some solutions there. I know personally, when I was in the business out writing, and I still do, I don't make a living doing it, but I still write business. I had talked to clients before where they wanted life insurance because they were victims of, and I hate to say victims, but in essence, they kind of were. Mom or dad had to go through spend down. They had nothing left. They didn't even have enough money to bury themselves. So the kids had to pass a hat around to bury mom and dad. You know your clients don't want to do that to their kids, and you know that your kids, your clients' kids don't. You get my point. The thing is that nobody wants to pass a hat to bury somebody that they love. You don't want to put that on your kids, and your kids certainly don't want to be the ones that have to throw money in the hat to bury their parents. And this is one way we can do it, is by utilizing these trust products. Okay, Greg, I know you got, let's talk about this client later. Talk with many folks are the quotes for guarantee. Okay, yeah, I'll call you about these here, Greg, and we can talk about some of these cases that you're interested in. We can certainly do something for them. Okay. All right, so it looks like the question box is empty. Again, you can call here anytime. You can ask for myself or anyone in life marketing. You can see the number on the screen is 800-255-5055. I appreciate you taking time today. I'm sorry about the audio situation. I think maybe what I did is I muted it for a minute because I didn't want to call from the ear, and I didn't click the button hard enough to take me off mute. So anyhow, call me if you have any questions. Otherwise, you can expect a call back from me. Again, the number here is 800-255-5055. Have yourself a great weekend, and I look forward to speaking with you soon. Thanks.